Now, volleyball was another one. I enjoyed playing that for like the garbage class that you had to take in high school. But I just wasn't tall enough, man. That net's way up there. What's the point of that?
Tall enough. It's hard to jump that high.
I'm not a bad jumper, actually. I feel pretty, got a little confidence there, but yeah.
Could you still jump now? You want to have a jump off?
You have a jump off? I could beat you in a jump. Yeah.
No.
Hands down. I can jump. I got more of that Spanish in me.
All right, let's have a jump off.
Pick your target. One of these lights up here or something?
We'll get the thing at the combine, the thing that they hit, and it shows exactly how tall or how high you jump.
Go down and play it against sports. I'm in. That's a game. Hey, welcome to the Close and Beat, everybody. Happy Monday. You bet the office on that?
Yeah, I would.
You would bet the office? Do you think you can jump higher than me? 100%. Well, this just in. Apparently me and Cody are going to have a jump off for the office. There may be a chance. Welcome to our show. That has nothing to do with stocks or anything, but we do talk about the stock market here because we're financial advisors, and we do things a little bit differently. I have our class every Thursday, notes from Jazz, email that I put together on the weekends to keep you updated, and I'll just help with anything, right? The call that I had just before this show was someone who wanted to do a backdoor Roth IRA sort of conversion, and they couldn't do it because they had a large balance in their IRA. I was kind of explaining the taxes, and they're like, "Oh, well, that sucks." And I'm like, "No, wait, you just give up?" And so we're going to make your IRA disappear so the IRS doesn't see that, and then we'll make it reappear. And I kind of went through the whole process there. It's going to save them a ton of money. I love doing things like that oftentimes it's in the fine print people don't know about, and you bring it up, and they're like, "Oh, that's awesome," and I'm a temporary hero. Things like that are fun. Hey, I hope you had a good weekend. We got a kind of a slow week ahead. I'm gonna go over the data. I'll share with you exactly why, and then next week, Thanksgiving, right? Next week's Thanksgiving. Next week's Thanksgiving, yeah. So it'll be a real slow week there as well. Very normal, very typical there. We also have earnings season coming to an end. Sort of like unofficially this week. Walmart is seen as the end. So the big banks are seen as the start of earnings season where everybody pays attention. And then you have Walmart, which wraps it up. And that doesn't mean that earnings season's over. It just means that those groups of names, Walmart and the big banks, all the action happens in between them. Everything after that's pretty much retail oriented, and it doesn't get much attention there. And so you kind of see a little bit of that today. Let's take a look. You got I'll start with the Dow, actually. So the Dow didn't do a whole lot. Actually closed, we'll just call it flat on the day. And that's because of a tug of war between about three names. Boeing was higher on the day. That was your biggest contributor, actually. And you love that. If you've been waiting for Boeing to bounce, that's a great sign, actually, for what's to come, hopefully, on Boeing. But healthcare was weak today. United Healthcare is one of the bigger price-weighted stocks on the Dow, meaning if United Healthcare has a weak day, it can pull the Dow down. If everything else is quiet, it could actually pull it negative because it's $450. And if you don't know, the Dow is a price-weighted index, meaning the higher price the stock is, the more say it has in the performance. Kind of one way to say it. So United Healthcare was lower. Amgen also lower on the day and about to make new lows. And so that tug of war there between those three stocks gave you a recipe for the Dow to not do anything. So I don't have any great news for the Dow today, nothing too exciting to share with you, unless you played Guess the Dow, in which case you may be the winner. What do we got?
Yeah, your winner from last week was Mr. Colin Perry. Congratulations to him. He is a client, and he's going to take the account credit. He had a guess of $36,090. So congratulations to him. We got our leaderboard for this week, and it's a good one. I'm telling you. Jerry Lou is actually in first to start the week. We haven't mentioned him in a while, so good for him. And then we got Jorge, Evan, Miranda, and Luis are your top five.
I like it. We got some clients in there. You know what I mean?
Yep.
I like that. I like when they're in there. And I'll tell you what, whenever you play Guess the Dow, if you're one of our clients, take the credit. Don't take the gift card. Take the credit. We'll credit your account $100, and it can be a Roth IRA even if you've contributed up to the $6,000. So if you're a younger person, you take the $100 credit, we'll invest it, we'll get it going, but take that because technically you're getting that extra $100 put away, and there's no rules against that. So congratulations, Colin, by the way, for winning Guess the Dow. I hope you play. No strings attached. You're welcome to play. Back to the stock market. There we go. You got the S&P here. Also a flat day. Now the S&P, if you've been under a rock, the S&P is up about 25% year to date. It's in second place as far as year to date goes. The Nasdaq's actually beating it there. And the reason is, for today not really doing anything, the leaders in the market today were the sectors that don't have much say on what the market does. Utilities higher on the day, which actually I kind of like to see that there. But you've got consumer staples, a fine, decent day, 0.5%, sitting at new highs, all is good there. You got energy stocks, what is that, 0.8% on the day? But here's the problem with that. So if I go over to something I've shared with you guys before, right here, there you go. So here's the weight: utilities, energy, and consumer staples. They make up less than 10% of those sectors make up less than 10% of the entire market. So if this group, and energy have a massively strong day, but tech or healthcare, like we talked about earlier, financials, communication services, if they all have a little bit of a down day, which they did today, there's no chance that these sectors are going to lift the market. So hopefully you get that there. Pretty cool. All right, so if we're looking through the S&P here today, what do you have going on in the individual stocks? Not much. Some of the excitement, maybe Take-Two falling a little bit, some of the REITs like American Tower pulling back. But what do you do with this stuff, right? Like, okay, Win. If you look at Win, so it's actually, where did I put that there? It's trying to form a low here, looking a little bit better, trying to put in a bottom from all this, post-COVID pullback mess. But what do you do with it? Tyson, that's a good one for earnings we'll cover later. Molson Coors. There's some stocks really starting to wake up that were previously weak, but every other stock out there, I'm not sure what you do with it. Under Armour, a little extended here. You got Lamb Weston, nothing, sitting at lows. I think it's a tough time to do anything new. Here's Equinix, it's a REIT as well. We don't know if that's going to be a bottom that eventually gives you a rally or not. And we also don't know when we look at the S&P if this is going to give us a little pullback or just go sideways. And so it's a really tough time to do anything new there. So what I did is I started looking back. I said, okay, the S&P is up basically 25%. How often does a year that has a 25% gain through the entire year produce another year that's really, really strong, right? Is it a big deal, right? How often does a year that has a 25% gain have the next year be better than that, right? So we'll take a look at that here real quick, give you a little bit of data to send you along with your friends and make it sound like you know something. Here is every year since 1990 where the stock market gained at least 25%, and I'm using the S&P, and I'm using total returns. So you got to go over here. I wanted to organize it this way, so it's a little bit odd. 1991, every green line here is actually the year in which it gained more than 25%, and the gray is the year following it. In not one year, looking back every year since 1990, did a 25% year follow itself up with gains that were even better. Now, there are decent returns. I won't knock that, right? In 1997, we gained 33.4%. In 1998, 28.6%, right? Kind of at the start of a bull market, though, if we're being fair. That started back over here. In 1995, 37.6%. The next year, 23.0%. So you have a lot of these years. If you were to take kind of an average, doesn't matter. The average is less than what the year before produced. So a 25% gain or more doesn't mean the market's going to fall and collapse and you should sell everything, although it kind of feels that way right now. It means that next year there is a very low probability that you're going to replicate or even do better than this year. So start getting your mind wrapped around that. And if I could for a second, think about all the CEOs, all of the directors, you know how to look this up, right? That are selling shares right now. Tesla is the obvious one, right? Just because it was a bit of a Twitter spat there. But Tesla is the obvious one. Elon Musk is selling shares. He doesn't often sell shares. He's selling a lot of shares. And you can go, oh, it's a tax thing or whatever. What about last year? What about the year before, the year before, the year before, the year before, right? So he's starting to sell off shares. If you look at Jeff Bezos, I don't know if you know, can I pull this up? Let me see. If you look at Jeff Bezos, he sold 50 million shares a day Pretty much, how do we do this? I want to show you this. This is crazy because these are just the headline people. But look, let's look over here. This may not look great, actually. I'm sorry. They're good enough, right? So you got Jeff Bezos, which every one of these is Jeff Bezos from when he was a CEO to when he's left here, right? Look at the dates. November 4th, 3rd, 2nd, 1st, and then we go into May, all through May here. We go August, good chunk in August. Look at how many dollars worth of, or how many shares he's selling over here. 50 million shares, 50 million, 50 million, 50 million, blah, 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 all the way down. Look at that. He's been selling shares all year. And if you were to just take a second and like look at random companies there, I just thought Salesforce.com, right? Big name. That CEO is exercising shares every day. And then the very next day, selling those shares. Then the next day, he exercises shares. The next day, he sells them. The next day, he exercises. The next day, he sells. Look at it. It's fascinating to see that. 30 million shares every single day since about June, right? Why? Stock's doing great. If the market's doing good, stock market's doing good, everything's doing good, why would he not want to hold out for more? I'm not saying that there's like a collapse coming. I'm definitely not saying that. But what I'm saying is these big CEO, Mark Zuckerberg is another one. Mark Zuckerberg sold 77,300 shares almost every single day this year. The entire year, every day, 77,000 shares. It's not because they think there's I don't think it's because they're predicting a crash. I think it's because they see froth. They see greatness out there and they're saying, well, I'll just sell a few shares into that, right? When the stock market's moving higher, you don't think like, oh, great, it's going to get better. I just showed you data to show that next year is not going to be better than this year. That's it. It may be good, but it's not going to be better than this year, presuming we stay right here. So why not take a little bit off? Why not take a little more off, a little more off, a little more off? Every time you hit new highs, you got to look at this because if you were to take that same screener and just look at every CEO, every director, every CFO, every COO that's selling shares right now, especially starting the second half of this year, that's a big list, right? And again, it's just because they can, right? You can. Everything is so good right now. Anyway, so you got the Nasdaq also flat on the day. It's in first place, but small margin. Just a couple names stuck out. Splunk's getting they lost their CEO. Stock falling apart there. In the same space, you got CrowdStrike, one of the weaker ones as well. And I think Morgan Stanley downgraded them. They actually started their initial coverage there. They say this stock is a sell. They lose money. No need to do anything with that stock. If you look at oil, maybe trying to recover here. This pullback, I hope, continues a little bit more. I think it'd be better if we get more of an energy pullback, but we're just not getting that so far. You got interest rates rising ever so slightly there. Now the bond markets are fully back open. And you got the VIX. I'll use the VIX futures retreating over the last couple days. Wait, the stock market didn't retreat. What's going on there? The VIX shot higher before the stock market gave you any down day. Now it's falling apart here, right? Fear is leaving the market there. What else do I want to share with you here? So in our notes from Jazz, by the way, every week I do an email for clients here, and I try to point out different things. We talked about the rate of change this weekend. The rate of change in the stock market. Look at this. Here's the stock market from like 2012. Steady uptrends can maintain themselves really in perpetuity, right? They could just be amazing, consistent long trends. That's why I always say when you find a stock that's trending like this and never gets too extended, hold it. Don't try to pick the top. You hang on to that sucker because that thing could just keep going. Years of this. But now we're entering this phase in the stock market where you could see the acceleration, right? I don't have to like draw that out. What does that remind you of or start to remind you of? Here's when you zoom out and you look even further, looking back into the 1950s. Look at that stock market. What does that remind you of? And so I went through all of this with our clients and said, hey, look at that. Doesn't it remind you of Tesla? Kind of reminds you of Tesla there, doesn't it? Well, we had a 40% pullback in Tesla. And it was no big deal because it just took off again, right? That's fine. These pullbacks are fine. So now we look at this in the stock market and we go, what if we pulled back that kind of, 40%, 30%? It'd be a blip on the radar. So although it's a little bit small for you, I was actually showing how a 10% correction is nothing. A 20% bear market, you look at that and you got half of the rally, not even half of the rally here. If you pull back 27%, you're just back to the highs that before the whole virus started. And you'd have to pull back 52% to get to the low from the March low of COVID there. And it still wouldn't be a big deal. Picture it. Picture it falling all the way down here, over a year or something like that. You come all the way down here, it's still, you got a nice, strong, trending higher market, just more volatile. The point being, you have a rate of change in the stock market that's starting to pick up. You feel it. You see it, right? You see your account balance going up faster and faster and faster and faster. We do the same here. We manage all of our clients' accounts. We see the total every single day. It's going crazy. Like, it's just getting faster and faster. Don't you think Zuckerberg, Mark Benioff of Salesforce, Bezos, Musk, don't you think they all they're smart people. Don't you think they see that and they're like, look, I'm in this. I'm not selling out of my position, but I'm going to sell some of it, and then maybe I'll buy it back. Elon Musk is famous for that. When his stock is depressed, he buys back shares. Look it up. You could see actually when he bought in the 200 and 300s, and obviously did really well. Anyways, I got off topic there. Just wanted to point that out. New highs for the day. 47 new highs, 2 new lows. A couple things to point out here. We got genuine auto parts. This falls into the same camp as AutoZone. LKQ is another one there. LKQ is a parts dealer. This would be O'Reilly's, Advanced Auto Parts. These guys are all killing it right now. Anything that you look at. So I just wanted to point out a new one that's about to make new highs. That's looking really strong as well. It's in the same camp, just so you have a handful of stocks to compare to. LKQ was the other one, just hit new highs. That continues to be nice and strong. Financials. Look at the things like look outside the big banks, the easy ones, the Bank of America, Goldman Sachs. Look at things like Aflac. There's a potential breakout right there. You can see it. You got consolidation here at these highs. It's trying to break out. Just did touch new highs here today. I want to point out Abbott Labs, very similar pattern, spread out over a longer period of time, but people that like looking for those new highs, there you go. You got something to look at. And I think it was Principal. Yeah, Principal Financial, same thing. Tight consolidated breakout in a stock that's otherwise just giving you more and more there. So you like that breakout here today. You like the extra volume in there. I think that's something to be excited about. Stocks in the news, and then I'll stop rambling and take your questions. Nope, it's going to be Tesla. You got more Twitter fun with Elon Musk there. Got a little jab at Bernie Sanders over the weekend, I believe. And so just in the headlines for that, not necessarily for the stock in any particular reason. Remember, it's overbought. This is the very same thing like the stock market I was just showing you. You got a nice trend. Everything's quiet, moving higher, looks good. Then the pace of the acceleration picks up. That's not long-lived. You can't do that. Go back to every one of the closing beats that we did. Now, every day I'm like, you can't do this. You can't continue at this pace. So thankfully, getting a little pullback there. AMC, there's another one on the list here. So AMC is getting real smart. I'm starting to like these guys. Not the stock. I'm starting to like these guys. They said, hey, we're going to let you guys pay for movies with Bitcoin and other cryptocurrencies as well. Yeah. Talk about attracting your audience. Who's the audience that bought your stock? Well, they're into that same stuff. Why not let them spend some Bitcoin there? I thought that was kind of brilliant there. So that stock was higher on the day. Boeing sells a couple 777 freighters. They got the air show in Dubai that they were hoping to get some orders. That's one of the good news events for them. And they're also saying they're very hopeful that China's going to let the 737 MAX back up in the air here very soon. So that was a lot of positive news in one day for the stock. Speaking of positive news for the previous owners of Casper. So Casper, the mattress company, is getting bought out by Durational Capital. $6.90 a share is what they're paying. That's why you see the stock price gap up around that area and basically hold up there. As long as that deal goes through, that is the price that you will get if you own the stock when the deal closes. And you got Tyson. Tyson. They beat on earnings. Everything looked really good for Tyson. This was the one that I chose to kind of focus in on. And if you are paying attention to Tyson, they kept their dividend the same. Everything's good there. The only negative, they said labor has been very challenging throughout the year. As they mentioned before, they're seeing a light at the end of the tunnel there because they're able to keep and maintain their plant staff. They're one of the only people that said that this earnings season. Just for fun, the word price and the word pricing mentioned 54 times in their earnings script. They put out a script. You can analyze it and take a look at that. I just like looking at the words. 54 times. They've had to raise their price pricing substantially, but clients continue to, or customers keep paying it there. Beef revenues up 17%, pork revenues up 20%, chicken revenues up 12%. They did great, man. Chicken and beef make up 69% of their business, but pork had the biggest growth overall, so I thought that was pretty cool there. Record performance in the beef segment. Everybody's eating the beef. Tyson, Jimmy Dean, Hillshire Farms, and Ballpark Franks doing well. And what you know it now, to talk to you last week, hot dogs. Hot dog inflation's moving the wrong way. There's no inflation in hot dogs. Prices are getting cheaper there. So if you're getting hungry, get yourself a Ballpark Frank. Right? You got a favorite hot dog over there?
What? No. I don't really like hot dogs.
Don't like hot dogs?
No, not a fan.
Like at a ball game or something? Like
I'd rather get a burger or something,
That's true. Yeah. There was a guy when I used to, way back in the day, first company I started, across the street, the guy would make the hot dogs in the stands there, or like in the cart. Phenomenal hot dog. Then one day, he tells me he's got congenital heart failure. He's got something else where what's the thing where you have to have the thing put in your arm, and he's like, I could have ate better. I stopped eating the hot dogs.
Oh, man.
I mean, that might not have been the source of his problems, but boy, I stopped eating some hot dogs real quick.
I will say those downtown St. Pete hot dogs were very good.
Yep, because they're warm in the juice, and then they put it on the grill. That's it.
Oh, is that it?
That's it. Give it a little singe on the grill. Nathan's hot dogs, that ain't a bad hot dog either. Yeah, I'm not a big hot dog fan, but I love when you sear that sucker on the grill a little bit. I love it. Hey, let's see what questions you have, and then I will get out of your way for a Monday. I didn't share this with you. Hold on. No, I did the work. I'm sharing it. Options expiration week, right? We talked about this in Notes from Jazz. This week is options expiration week. What's the performance like? Let's take a look real quick. So the point of this being, is this normal or not? So let me hop on over here. All right, first thing I'm going to take a look at here is the week before options, looking back a year, options expiration week, and the week after. You notice anything odd there? Options expiration week tends to be negative. Not by a lot, not a collapse, not a crash, just a slight down week. The week before tends to be strong, which we just saw, but kind of. And then the week after tends to be strong. But this week, if you see more weakness, understand that that's totally normal. Now, what day of the week should you experience this weakness? I like to look at that stuff. Here's a breakdown of each week, the average performance by day, looking back over the last year of options expirations. Monday, very small up day. Actually, today was what? Flat, up 0.01%. So non-event there, basically just a touch under what was expected. Tuesday, Wednesday, small down days. If you're looking, the volatility starts to pick up a little bit. Thursday tends to be quiet. Friday, naturally, options expire on you're done trading them on the Friday. They settle actually on Saturday, but so you've got the last day available to trade your option. Naturally, as people are adjusting their positions, you can expect that to be one of the more volatile days. However, it tends to be a little bit weaker. So we'll see what happens there. Add that to the fact that you got a stock market that could really, really use a pullback, right? I mean, a real one there. Anyways, let's see what we got here for questions. Gave up the short on ARK and went long. There's a lesson. Did he? Wow. I saw the short ARK fund come out. Someone might be able to know. SARK? It's probably that one. It is. Yeah. SARK is the inverse of ARK. I'm not sure really why there's a need for that one, but that is a new ETF. You bought the Disney December 160 calls there. Oh, no. I don't have a problem with that. I like it. December's a little close. Oh, it's closer than I thought. I don't have a problem with that. You've basically gone out a month. You're giving yourself a month to get any little bit of a pullback here. No problem at all. Yep. Body's earnings not good. You may have to take your loss and move on. Down over 75% since you bought it. I hope it's not a big position for you there. Wow. Yeah, 460. Worse after earnings even. Yep, 365, 370, somewhere in there. Good news is you're not going to do anything at the moment. So if that happens to gap down that much tomorrow, see if it puts in a little bottoming tail. Give you a chance. You like the PayPal bounce? Is that thing in full force? Or Oh, good. Yeah. Remember, this is the one, for if you're not familiar, this is that one that had a big gap down on earnings that was already extended, right? So everybody's fishing for a bottom. That'll happen every time. Doesn't mean you're going to guess the bottom and it's going to be great. But everybody starts fishing for a bottom when a stock is already down and extended, then gaps down as well. So I like that for your bottom here. Be awesome to see tomorrow be like a down day and the Nasdaq just a slight down day, and see PayPal do like the same thing. It just doesn't budge. And I'll let you know people are committed to that bottom. Yeah. Infrastructure bill is a big nothing burger. Yeah. Well, hey, right? I mean, we're getting that signed today. We'll have our new highways and stuff by tomorrow, right? Yeah. Didn't they do the same exact thing after the housing crisis? Same thing. I was just watching a video on the bonds, the revenue bonds they issued out there for a full year. Issue these revenue bonds. Where'd they go? You guys get a new bridge? There are no bridges here. Oh. J&J is spinning off. Yep, sure is. Yep. I love it, man. Well, we'll see what happens with that. I don't know. You like Visa over MasterCard, or you're saying Visa is lagging MasterCard? I don't know. I haven't looked into that too much here lately, but it's a very obvious disconnection there for sure. Mm-hmm. Any thoughts on a double your position? Oh, you're going to average down on some Peloton now, huh? Is now the time to do that? So look at it this way. Is there, you know how I like to say, like, this is when traders look at stocks. This is the event that happens that's really popular with people to buy stocks or sell stocks, right? I don't have anything. I'd be lying to you if I said, yeah, you're down a little bit, go ahead and add more. There's no good reason. There's no technical pattern. There's no fundamental news. There's no anything else coming out for this stock at the moment. So this will be a purely technical driven stock. It's got to show you a bottom first to then get people to come back and look at it. That's how I would treat it. Yeah. James has a request for you there, Cody, if you could just go ahead and link up his wife.
Oh, I just did that. I literally just did that and emailed him back.
Oh, James, you're good to go, man. Look at that service. I don't want James to feel like he's got to come to the show and he's got to ask a question. But I did see your email, Cody's on that, and apparently it's all done, right?
Yeah, all done. It's all linked. We're good to go.
Love it. I love it, love it. Cool. I will wrap it up there and get out of the way, get back to work. Wish you a good rest of your day. We'll be back tomorrow to do this all over again. Britney Spears officially free, by the way. $60 million. And happy birthday, Macho Man Randy Savage. It's his. Can I do the impression of Macho?
A lot of people said you had a good Macho Man Randy Savage impression.
No. Oh, like snap into a Slim Jim? Or?
I don't know. I heard you had a good impression of Macho Man Randy Savage. But
No, I got a good impression of Hacksaw Jim Duggan, though.
Well, let's hear it. That'll do.
I need a 2x4. Yeah. Who was that one? Hacksaw Jim Duggan. I mean, Ultimate Warrior. How could you not have been a fan when you were 7, or when I was 7? When you thought it was real, the Undertaker was going to come get him. All right, enough immaturity there. We'll see you back tomorrow. Enjoy the rest of your day, and adios.